Hi everyone, Stuart here. It's Tuesday, the 4th of March, and as ever, the news flow continues to charge out of, out of Washington in particular. So, restart my news feed here. This is the chart we see here to my right, your left. Is the Dow yesterday. Let's go back to the daily time frame. So as we were saying yesterday, at one point yesterday, my system on an intraday basis was looking for a long position here. This is Friday's close. This is Monday's candle. Big engulfing candle. See how we've a big negative engulfing candle on Friday's bounce up. So the trend remains very much to the downside for the stock markets. Obviously, the announcement last night that the from the White House and confirmed by Trump later on that the 25% tariffs are coming into play on Canada and Mexico. Canada's responded this morning. What they were talking about? Some lumber issues and aluminium. 12th of March, those tariffs start to bite incoming into the US and. Mexico's been quite quiet so far this morning, but obviously the other big news was the announcement of the suspension of military aid to Ukraine from America as well. It's a real game changer there. The Europeans are talking about rearmament. Van der Leyen is talking 800 billion euro rearmament for Europe. A very cohesive sort of meeting that Starmer chaired or held or hosted, I should say, in London on Sunday. That's followed through, but the news flow is moving really quickly. Obviously, yesterday's weak ISM PMI data that we talked about yesterday hasn't helped things either. So the more important services number comes out tomorrow. There's not a great deal of data today, so we're just going to have a look at some potential live positions in the short term frames. But the wider, obviously, remit and sentiment we can't ignore. It's really very significant what's going on. And as I said, two major announcements yesterday: the suspension of military aid from the US, from Trump to Ukraine, has really sparked things this morning. China obviously talking about retaliating as well in a sort of incremental sort of way. Nothing a massive reaction from the Chinese. So it's just seeing how far this goes. But these new tariffs, certainly on their nearest neighbors, Mexico and Canada, major trading partner. Remember, they had the North American Free Trade Agreement at NAFTA for years. That was renegotiated under Trump's first term in office. All three sides party to that. So there's a trade deal in place already with Canada and Mexico. But positive news from Trump yesterday. I think it was Honda talked about moving production of the Civic for the North American market from Mexico to back to the US because of the tariffs he's talking about. So the one positive headline out of that, but obviously the impact on global trade, on global GDP, on US GDP, it's already been downgraded to about 1% for the first quarter. It's a bit of a worry potentially, but how far this is just a negotiating tactic from Trump to get what he wants, or how far this is actually going to go. Again, as ever, only time will tell, and the devil's in the details. So as far as we're concerned as traders, we just need to take this news in the floor as it's coming out, and see if it changes things either fundamentally or significantly or technically from our trading point of view. So here, this is a simple 21-day moving average. A lot of you that know me know that I really like this simple moving average. It's 21 EMA. So we've been under this this line, this 21 EMA here on this setup here since the 18th of February's first break. But the big move down was that Thursday before I went away for for a week break last week, and then the big blowout on the Friday where we were short and we captured lots of pips sideways. And then, but the point is really the trend remains to the downside. Technically the RSI's slowed down, the MACD signal and MACD line crossed, the histogram's negative. The rate of change, which I've got on here, I'll do a little technical explanation for the rate of change. It's another one of those indicators that are a forward-looking indicator. We'll do some updates on that as well. But again, you see that topped out all the way back here. It went under the zero line. Zero line's key with the rate of change around ahead of this break of the 21 EMA. So it's a broken head, but again, it's still trending low. The momentum is starting to move down. So all very much in play, these tariffs and the fallout from that. So stocks had a bad day yesterday. We had our worst day for 2025. See the daily chart there yesterday. Big down yesterday. The Dow lost 1.48%. The S&P lost 1.76%. The more important S&P 500. Actually, let's go back to our default setup so you can see our crossing strategies here. So big move down here for the S&P from last week's hiatus on Friday, which continued to unwind to the downside. So 5,816 is where the S&P trades them at 1.76% decline yesterday. Big down candle again, big engulfing from Friday's bounce, and we're down. Futures are down again this morning, and you can see here into a support area. Let me just make that chart a bit bigger and make me a bit smaller. You'd rather see the chart than me, I'm sure. There we are. So we're moving to the downside into a key area just above 5,800 is where we're sitting at the moment for the S&P. Nasdaq. Actually, let me just go back to that. The other thing that was happened yesterday is we've got this negative cross of the 20 moving average crossing from above to below the 50, the flatlining 50-day moving average. So we consolidated at highs, went to new all-time highs, and then we've shaken out, and we're going to potentially shake out much more aggressively than we've rallied up. So this move down could have some more momentum to it, and that's set a 5700 or 5720. This 20-point zone here is the next big leg down. If this level where we sit at the moment, the 5820, the 5800 level breaks, you can see that next big leg down is to this zone here for the S&P 500. So short, and I say this strategy has been short since the 20th on that big candle. Remember, body of the candle, it matters. Size of the candle matters. And down we are moving currently on the stock markets. Nasdaq even a weaker state than the S&P 500. We look at the Nasdaq, the S&P here, the 20 and the 50 just about to cross. The Nasdaq here, you can see we crossed a few days ago at the end of February. Another much bigger engulfing candle yesterday, negative engulfing candle. The tech stocks, the babies, the baby boomers of this big rally we've had in the stock markets generally. The Magnificent Seven all getting hit quite significantly, and Nvidia following those results on Wednesday took another hit yesterday, and we're down again. 20,260 we trade at the moment here on the Nasdaq 100, and next support is these on this daily time frame, takes us into this zone through here under the 20,000 level at 19,975 from this cluster here, which takes us all the way back to October and November, the beginning of November, the end of October, when the rally really took off. So you'd see a double inverted head and shoulders there, potentially for some here through here, and we've broken out of that range there quite significantly. End of last week and the beginning of this week with that big down day yesterday. The wider Nasdaq was down 2.64% yesterday. Big hit. And I say futures are off 0.5% at least so far before cash markets open shortly. And again, you see RSI here moving into that key potential overbought zone. But a big move down here to on Nasdaq. So that has already crossed the 20, crossing from above to below the 50. So last week, and if we look at the Dow, it's still the better performing of the three major indices. But again, 50 flatlining, big down day yesterday. So the Dow was off 1.48%, but the 20 has yet to cross below the 50-day moving average. So the industrials, the 30 key industrial companies in the US, hanging on a bit better than the leaders in the tech sector in the Nasdaq 100. So we're down. Interestingly, with the just bringing the forex. Interestingly, the CAD hasn't actually been as affected as one might expect today from the actual announcement of the. So perhaps the anticipation of the tariffs yesterday was more of a worry than the actual announcement coming through when it did. So if we look at the sorry, I've got this default on daily here. We'll have a look at some positions in a minute. So the big rally for the dollar against the CAD has been open. We peaked yesterday at this over 145 yesterday, but we've come back today as the dollar has weakened against the Canadian dollar this morning. So we've topped out here yesterday at over 145, 145.40, and we're back onto 144.20 here on an intraday basis. So quite obviously unsurprising volatile session as the Canadians kicked back against Trump tariffs. They're talking about what the Canadians responded with. I think it was a lumber, wasn't it? Some lumber supports and some car imports. But for 2nd of April, it's the next big line in the sand for some pharmacy and lumber tariffs from the US on Canadian exports as well. So anyway, dollar CAD continues to sort of hold at these sort of bounced levels that we've seen from this low under 144, 142 towards the end of February, but it's certainly rolled over. So the loonie stronger today on the back of perhaps the response from the Canadians not taking it lying down. But again, obviously, it's all really in the devil is in the detail as ever. Euro 105.50. That's certainly benefiting yesterday and again today. Oh, breaching quite significantly as well today. That's a real highlight. And probably the key mover today is the euro through that key solid resistance at 105 on the back of von der Leyen, the head of the EU, sort of talking about this rearmament, and it's helped. Obviously, yesterday the DAX and the CAC were at all-time highs. The FTSE was at all-time. Sorry, CAC wasn't, but the FTSE in the UK and the DAX in Germany at new all-time highs. Have cooled off a bit today. We'll look at the other indices in a minute. We've gone back to the we're done through the currency. So euro, significantly bid yesterday and again today. So see where we may be going for that one. We'll come back to their next. Obviously, big round number is the 106 level, but we're already in a bit of resistance area at the moment at the 105.50 area, 105.55 currently trading. Sterling 127.40, just shy of 127.50 at the moment. But again, on a strong day yesterday, and again that bid and rally from mid-February continues to hold. But we're now, as you can see where we are now, if we look to the left here, you can see this congestion zone from early December, which was a rolling top. So we've rallied up small candles and broke away. So the momentum at the moment is stronger candle to the upside. So going again a weaker dollar against the sterling and euro today, and we see, and also against the yen. So break of this area where we are now, this 127.50 area could take us. There's a lot of fresh air up here. See how we came down quite steadily there. So break through this area. So the ultimate would be, or that intraday high we had on the 6th of December took us to 128 itself. So we need a bit more momentum to take us back through 128, and that would then test the 130 zone. But at the moment, we're a bit of a stall. See what the services PMIs look like tomorrow. The key US service PMIs tomorrow, as well as UK and Europe. And obviously non-farm payrolls, and obviously the payrolls, non-farm payrolls on Fridays, and the ADP data tomorrow as well. But more on that to come. But sterling's also bid against the dollar, and the yen 148 new lows here, although there was still relative highs historically. We have breached and broken and held under the key 150. It's the 150 area here, this yellow line here. We closed back under it yesterday with a significant engulfing candle again, and then this morning we've taken another leg lower today to 148.35. So we breached that support area we were talking about yesterday. And remember this area here, this 148.75 zone from the beginning of December. So again, these were sort of a weak support. This was the strongest support here at the 149.50 level. That gave way this morning, and we breached it. It's only 1 day so far, but that's quite a significant candle. Finishes anything like this today. That's a very bearish or significant bearish move, and a break potential to the downside again. And I know my end of day system is already looking at a short dollar yen, or adding to its short dollar yen position or at the end of today. But let's see how the day finishes first, shall we? The reason we're saying that is that simply the rally here from this low back here to beginning at the middle of September. You can see it's a steady old rally, some big candles on the way up. This is just a retrace of this leg. That was a retrace, and then we had another impulse to the 158 zone. Plus here, we've got the 150. We were looking like we got the 160, weren't we? At the beginning of the year, it didn't happen. We've turned around, but so it was a nice rise, and we could go down much more, perhaps aggressively, if again, there's some more move or stories from the Bank of Japan, and particularly about moving rates in the upward direction as the Fed continued to stall in their cutting cycle, worrying about sticky inflation, which continues to be the case, and caught in the pincer movement of the trade war. So obviously Japan, major trading partner, but sort of out with the immediate crosshairs of the current Trump administration. So dollar yen significantly weakened today under that key level. So watch that level, guys. If we're back over 148.50 zone on the close of day, this move down might be just a muted one, but that's a significant break so far to the downside. So if you're short dollar yen today, you've had a good 2 days moving lower. Obviously, this strategy here has been short from the breakdown of the under the 50, initially under the 20-day moving average back here at the beginning of January, and then we breached here. You can see that 20 breaching the 50, big leap, retrace, held, and then leg down, and big candles to the downside. So dollar yen continuing to unwind to the downside from a very major 30-year plus high at 160 we had at the beginning of the year. Just going back to I did mention the DAX and the FTSE, didn't I? Just going back to the DAX and the FTSE, there's that new all-time high at over 23,300 yesterday. Now we've reversed that today on the panic about the tariffs being implemented and the withdrawal of US military support for Ukraine. Unbelievable stuff. And FTSE, similar sort of pattern. Less movement yesterday on the FTSE, but again, new all-time highs up here at over 8,900, and a more muted response from the FTSE as well to the downside in Europe. So a bit of a weaker dollar this morning, and stocks turning forth. I mean, the news flow is quite rapid. Trump has another speech tonight. It's not really a State of the Union speech because he's only just become president. But this is the typical time of the year when that takes place. So obviously a major announcement. It says 2 a.m. here on our Forex Forum calendar. This is GMT. This is my time, 2 o'clock in the morning. So major event or for Wednesday evening for Asian traders, early Asian traders tomorrow morning. So all eyes on that. So not a great deal of news moving well, not a great deal of news to move markets or economic data to move markets today, although markets are still moving quite significantly in the wake of the political shenanigans that are flying around us at the moment. All the beneficiary of a weaker dollar continues to be our friend, the yellow peril, that is Mr. Gold. So yesterday we had from this breach of this 28.50, this level here we were talking about as support level here on Friday. This level was tested, this support area here. We talked about this yesterday, didn't we? We bounced. We had a good day yesterday. We closed back over the 20-day moving average. That's enough. That's a significant turnaround to sort of close any short positions there, reopen a long position, and we followed through that today with a breach of the key 2900 level, and we're currently trading at 29.25. Remember, all-time highs was Thursday. Initially Thursday the 20th, then again later on Monday, and we'd also tested again here on the 25th. So 29.55 high for gold as the worry continues to swirl. Obviously, yields are also on the bid. 10 years down, or has been down, trending downward. It's 415 currently, so we're down from the 4.135 area we had been, but still ticking up a wee bit today at the moment. So gold rallying. So any questions, anybody, about what's going on? We'll have a look at say any potential trading opportunities. Remember, it's all about having a system, following the system, following what's going on. So let's have a look if there's any opportunities across, well, stay with gold if you like. We can see, let's have a look at all layout we might use. Let's look at the VWAP gone. Parabolic SAR gone. Parabolic SAR one. Check the resistances off. What's happening is the daily? It's going to work for. It's come down to the 5-minute chart. So that's an interesting one. We'd continue to move higher here, gold. So we've already breached. So it's a positive. So right, this is. Let's assume what we're going to use. Actually, can you see that very well, guys? This is a setup where you're going to use to try and trade here on this 5-minute time frame. Okay. So what is the market telling us at the moment? Well, we saw earlier, didn't we? The hourly chart is nicely positive. We're above our pivot for the day. We're into the first resistance for today. Is that for today? Yeah, that's R1 for this time frame is there. So we'll continue. So we'd be looking to be, long. I mean, here we would have gone long there. Here on this candle here at 8 o'clock because it's broken to new day highs. It's above the pivot point for the day. We're above the VWAP. This is the volume weighted average price. It's a bit like the moving average, but it takes into volume a bit more into more account. But we're above the pivot point of the day, and we're heading towards R1. So it's positive, and we'd just be trailing our stop loss. Our stop loss now here on this hour would be round about there, 291.14. And just leave it to run, basically. See what the reaction is once we get to R1. So that's how to, use this strategy to play that. So here on the 5-minute time frame, what is that? The levels have been tested already. We've round now, but we've now broken. So again, this remains positive. There's our VWAP for the 5-minute, all the way down there at 2905. So this remains positive. It's sort of rolled over in the last couple of minutes. I'm actually going to take the don't like that. Okay, it's not looking very good on the screen. So I'm just looking at these. So let's look at this one. So different setup. Remember, we're biased to the upside. So this strategy is using the trend following analysis of the parabolic SAR, but it tends to chop around as the trend cools down, like we saw here at the top. So we got this. We need the SAR bottom buttons to be underneath the price action if we've got a nice move up. It's just normal candle here. I thought it was. And there's interestingly, you see the parabolic SAR here, the MACD here on the daily time frame on this gold position here is still negative. So it's rolled over. So it hasn't turned enough in these 2 days. But so just bearing that in mind on the daily time frame. But if we come down to the 5-minute time frame, you'll see. Let's come down some steps, shall we? So the 4-hour has flipped, and the 4-hour crossed there. The parabolic side already flipped, so the 4-hour trader would have had confirmation of entry here using this strategy yesterday. So there on that candle there, which is this morning, in fact, yesterday morning, in fact, and he's been long. Again, 4-hour guy. I would probably have my stop loss around there, 2895, and that's so the 4-hour is long with this strategy. That's nice. The 1-hour will be just as smooth to the upside. So there's the 1-hour, parabolic SAR all the way up here from the bottom. This cross here, we dipped and flattened. See what I mean about the parabolic? So it's flipped. So it would have taken you out there, but you could have then got back in there as the candle has broken to new highs this morning. That 7 o'clock candle we talked about earlier, and we're moving high. So this is still long, and again, your stop loss around about that level there, 29112 here on the hourly chart. If you're looking to drill down, looks like there's a bit of weakness in the current hour. So the 4 hours positive, the daily's positive, the 4 hours positive, the 1 hour's positive. So if you're going to go short on the lower time frames, remember you're going against the higher time frame trend. So always be aware of that. Okay, so just be aware that if you're going to take shorts here, you're going against the higher time frame trend. So, however, having said that, there was one there. It's just confirmed now. Well, this is the choppiness of trading a shorter time frame. So that the parabolic, the first step with this strategy is the crossing of the MACD line. So there we got the MACD and the signal line crossing here on the close of that trade there. The parabolic SAR hadn't flipped until there. So this is just confirming a short position here on this 5-minute time frame. But as you can see, we've already been short for 5, 10, 15, 20 minutes anyway. And we're into a resistance area on the way up this morning. So this is now probably proving to be a bit of a support zone. See this area here? Through here on this shorter time frame. And if we go back to so just bear that one in mind. And if we go back to let me just see, all right. We'll go back to that's okay. If you can all hear me. Good, thank you. Sorry, what was I doing? I was looking at my messages. Sorry. So what was I saying? Yeah, I've lost my thread a bit there. Yeah, so there we are. Although it's crossed here, and we've got short here. Although we've been down for 20 minutes, it might be a bit of a risky one, given that we're coming into an area. So although the system has triggered short here on the 5-minute time frame, I'd probably resist taking a position simply because we're coming into this area here. See what I'm saying? Although rules are rules and all the rest of it. Oh, you can't see that. Can you? Let's change that to a yellow color. So this resistance broke through it. We're coming back to test again. So maybe a support area, and we're bouncing off, and that's sort of that's perhaps telling us at the moment. So if we just go back to the previous layout when we were talking about the ones with the that had the daily. Had the pivot points on. Sorry, it was this one here, wasn't it? You can see that's what's happening. We're coming back to this pivot point area here, and that's how that one's playing out there on this 5 minutes. So the R2 level here on the 5-minute time frame is providing a bit of support once we've gone through it. But the fact we've gone through the R2 is quite significant as well. So we may, we don't, it's about 44% of the time. 27% of the time we get to an R2 level on any particular time frame. But as you can see, we are biased to the upside. So although that looked, it was a signal on the our previous setup here. The which one were we using? We were using the MACD and the SAR, weren't we? Here, I'd just be a bit careful about taking that short, or it's called. And there we go. You see, it sort of not proved the case, but there's an immediate bounce from this area. So, strategies are fine. Follow the rules by all means, but also apply a bit of common sense. Sometimes there's some reason for some areas. And if you can't see it, if you couldn't see that support line or resistance area, don't take the trade. Wait for some confirmation, or wait for or use something that makes sense to you. If this setup doesn't make sense to you, don't use it. You've got to be able to see, the width of the trees, as I say. But you, on top of all of that, you've got to be able to accept that, even if you did take that short position there, because that's what the strategy had signaled there, here at that candle there, you're now out of the money. Your stop loss is probably up here anyway, around about the turn in the market. Expecting a potential move down, but you see here they've flattened out, and that's the problem with trading the shorter time frame sometimes. Okay, so overall, the 5 minutes still remains sort of biased to the upside, doesn't it? The 5 minute time frame, even though it's flipped to the short time frame. So you'd be really looking to perhaps go with the higher time frame. So if you were just trading the 15-minute time frame, so we'd have one down candle here on the 15-minute time frame. So we had a nice run this morning up and right, and there's, you see that resistance area. So the full big down candle looks like we may have topped out, a bit of a tweezer top potentially, but then it's bounced. So the parabolic, although the MACD flattened out here, the MACD and the signal line flattened out, we have crossed. So it's just short here again. So here on the 5 minute, on this 15-minute time frame, it was looking to go short, but the parabolic saw has only flipped at this point. So you don't take the trade until this candle has completed in another 10 minutes or so on this time frame. Okay, so as with any style of trading, it's really about following the rules. If we go right back, if we go right down to the tick, not the tick chart, but 1 minute while you get this, the rules still apply. So here was the last short position. So this has gone short there, and the parabolic saw flips at that point. So it's at 13.13 that you go short here with this strategy, with your stop loss up here. And you're probably still in the money until, well, it flipped back there, didn't it? So you've closed that flat, you'd have got back in there, and you've caught that move down. And so the 1 minute is saying long, interestingly, at this point. So you've gone long here on the 1 minute at 29.24 just a couple of minutes ago. And you sort of, a spread would have, where would you go? You got in, you're in the money, aren't you, for this minute and the current minute. So the minute system, it's very short term time frame. So the last trade on this one would have been a long position at this point there. So you'd have got in, you're in filled about here at 29.24. You were in the money for a minute or two. But you're out of the money at the moment. You're still in the money, and this is saying, we're moving up. It's relatively positive. The histogram has turned green. The MACD and the signal line have crossed. There's another one there. This current minute. So staying there. I'd have my stop loss down here at the bottom of that wick. Actually, I might have it a bit lower than that one we're talking about. Currently, because it's a minute chart, isn't it? I wouldn't have it all the way down here, because obviously this minute chart we're all going to be in and out quite quickly, perhaps through here, 29.88. So that's currently long and good are in the money. I might pull the stop loss up a bit tighter there, the 29.23, so it reverses on me, but poking up. Remember, obviously, sort of the higher time frames. Obviously the hourly time frame and the 4 hour time frame are very little relevance if you're scalping here on these 1 minute and these shorter time frames. So we continue to push up, and it's a matter of where would you take your profits. Well, here you take the profits when the parabolic SAR flips again to the other side. So it's quite volatile in these short time frames. The beauty of short-term trading, sometimes when there's no immediate news flow, is markets can. Beauty is, you're not going to get a sudden. There's not an expected economic announcement. So the market players, the market makers, don't necessarily massage the numbers or the market in a direction, waiting to either buy or sell as the news comes out, regardless of what the news is. Sometimes. The downside is the lack of direction as if you're a trend following trader or a mean reverting trader, there's lack of direction because of the news flow. But I mean, we've had such a massive amount over the last few hours. There's little that's scheduled that's going to move it as much as perhaps waiting until Trump has something to say later on today as well. But anyway, it's as I say, there isn't a perfect trading strategy, my friends. There isn't a perfect approach to trading. You've got to find something and a time frame, whether it's this 1 minute chart or the 4 hour chart, that works for you and for your lifestyle and the amount of time you want to spend in front of the charts, or you want to automate it. However you want to approach your trading, there's opportunities, but there's obviously also risks around there. And that is one of the great appeals and benefits of the prop trade. And us at the proptrade.com in particular. I said prop trade generally, but us at the proptrade.com, we're a team of seasoned professionals. We've been around a while, quite a long time, a lot longer than certainly I would prefer to remember. But we are as open as and transparent as we possibly can be, and we got nothing to hide. We want you to be successful, and the beauty of the prop trading guys is that the challenges and the support that we offer you are very open and say transparent and obvious, but you can get in with a very small amount of capital, for a $5,000 account. So if you haven't got you've got a lot of money around, a $5,000 account starts from $55. We've currently got a discount for first-time users. So if you're out there thinking about, should I join these guys? Should I give it a go? Have I got the right temperament? Well, I'm here to help you with the temperament. We're all here to help you with your temperament. You've got to work on that, whether you're using real money or these simulated accounts. But for $55, we're offering for new traders a code in here. New 25 gives you a 25% discount on all our challenges. So whether you're looking to start with just $5,000, you've only got a few dollars to rub to invest, or the good size accounts are really these $25,000, $50,000 accounts. So the $50,000 account on this two-step approach is about $300 odd, but the 25% off that brings it down under $300. So it gives you a huge amount of capital, simulated funds to trade with. $50,000 gives you all sorts of options to trade, bigger lot sizes, more open positions, excuse me, and really try to move yourself as a trader forward. So do come and join us. As I say, if you've used this code before, it's only a once-off opportunity. So if you're not ready now, you might be ready in a week or two. It's still available to the end of April. If you've traded with us before, there's a 15% code available as well. So ask about that. And if you want to get going, you want us to help you, we're here to help you, and do come and join us. So our little where are we? Our little gold trade is still long here technically. But it looks like we might be getting stopped. The parabolics are still up here. It doesn't really want to get above that level, does it? At 129.25 level, it's banged into that for the last 5 or 6 minutes. But we're still technically long here because the parabolic SAR is there underneath, looking positive, although we're going sideways. Green still shooting out. We might be running out of steam now, aren't we? We didn't want that's the big down candle. We haven't been able to close above that level there. So 125.17. We've tested it once, twice, 3, 4 times. There we go, through it. I would perhaps be taking some profit out of that now, because that seems to be a bit of a resistance area. But see how this candle closes in the next few seconds, and see if it's going to continue to move up or we're going to reject. There we are. That's quite a positive candle, that last one. So if you didn't take your profits from the entry here, there we go. We've leapt up. That's what we've done. We were messing with us. I might be moving my stop loss up now to perhaps lock in. So remember, we got in here at the bottom of this this sell candle, didn't we? When the remember, this is the real MACD. It was crossed here, so we bought here at 129.24, and we spiked. I certainly would have probably got out there on that big candle, but it's looking quite good. So I would have pulled now my stop loss up to the bottom of these candles now, if we're still in this one. But yeah, some couple of dollars to be made there on in the last 5 or 6 minutes. So as I say, guys, it's really about having a system that you feel comfortable with, or some people trade completely with no indicators at all. They're complete price action traders. I know, obviously, volume point of control, VPOC, is very, very popular now with the VWAP as well. Anchored VWAP, another great approach. But yeah, I say find what works for you. So if you'd still been in that trade, I would have pulled your stop loss up. You'd have been stopped out for actual loss there, wouldn't you? If that's gone through where you are. But we've taken our profits at the top of that as there. But so there we go. It's a test. One last final rally in the last 10 minutes. Hasn't bought it at 29.26, and here we are. We're starting to move back down to the downside. A relatively big candle in this current minute. Happens to be at 45, but there we go. So in summary today, I'd say we've got a relatively a weaker dollar, although it's come back a bit. That's 1 minute to take me to the. It's come back in the last whilst I've been talking here. We went to 105.55. It's come back in the last half an hour. Sterling, similar sort of pattern that topped earlier. It's come back 127.53. It's come back in the last half an hour as well. Aussie, we didn't look at the Aussie in the we looked at the Canadian dollar, didn't we? Because the Canadian dollar is very much in focus. So again, the dollar picking up in the last whilst I've been on air here to the upside currently, but just go back to the higher time frames. Has that rally ended? Again, probably a bit too early to tell here for dollar CAD. Same with sterling. Strong day yesterday. Over the 127. If we hold 127, that's again positive. And then you can see what a resistance and support area it was here. It ran out of steam here in early December as we went to 128. The end of day resistance line sits at 126.65. So that's the next big resistance line for the cable traders, the pound against the dollar. To the upside, the most interesting for me really has been this the dollar yen short positions moving down, and see if that's turned around as well in the last so again last 20 that's 15 minutes, so it's actually turned around from this morning indeed, hasn't it? It's not just why we've been taking, so dollars come back into the yen. That turn started earlier than the other two on the majors, so perhaps indices are a wee bit better off. Obviously, the other big move we talked about yesterday was obviously the huge rally we had in the in crypto from the announcement, but then we had the complete turnaround yesterday, and we're lower again. So the 78,000 level we went down to. Just put that back to my default settings. This 78,000 we went down to last week for Bitcoin here. Massive rally here on the second. Turned around yesterday, completely another engulfing candle, and we've reverted back to the trend, which was very much still in play, although obviously added volatility. So 2 huge volatile days over the one, obviously over the on Sunday over the weekend. Monday's reversal from the back into the 92,000 channel, and continues to unwind. So watch that 78,000 low, that intraday low we've got there on the 28th for the next support level. And then we're back really within shouting distance of the 65,000 level where we were pre-election. So although Trump talked about the strategic reserve, there's no detail in that, and the general panic in the market has shaken out Bitcoin holders as well. And it's added to that move up we've seen in the gold market, going back potentially to test new all-time highs again. So I'll leave you with Bitcoin. Big day down yesterday following the big up day on Sunday, and we're currently holding 80,000, 83,300. But it's it's the down trend is still sort of biased for the cryptocurrencies and the leader Bitcoin. Tomorrow we'll be live for it's Wednesday. Tomorrow we got the that Trump speech overnight. ADP, the private payroll numbers will be live for that tomorrow again from 1 o'clock GMT. See how that transpires. 145,000 is expected for the private payrolls. We got services PMIs as well later on today. That's the big news really tomorrow, 3 o'clock. The services PMIs, are they going to be as weak as the manufacturing numbers were yesterday, which added to the wars? Let's go for there, why isn't it? Added to the wars of yesterday's panic and sell-off that the ISM numbers there at 50.3, and the prices biggest monthly drop in 5 years for the manufacturing PMIs, flying in the face of the better numbers we'd seen out of Europe and Asia earlier on in the day. So weakening or relatively softening economic data, and getting battered by the worry about tariffs, both on friends and enemies as well. So if there's no questions, guys, or anything else anybody wants to have a look at, I'm going to wrap this up and go and get some lunch. Good to see you all. Hope to see you all again tomorrow. Tomorrow, so ADP, key private payrolls data, perhaps less keen than it used to be, but still potentially market moving. So a bit of a weaker dollar. It's come back a bit since we've been on broadcast, and see what the actual cash markets look like when they open later on today. So take care, everyone. We'll see you soon again, and see you tomorrow. All the best. Bye-bye.